No. Hey, Angelo. Good to see you.
What's up? What's up, man? What's up?
I know you're probably extremely busy right now with what's going on in the industry, and that's kind of why I wanted to have you on what's going on with the market, and then if you can kind of go over some basics for home buyers that are either first-time home buyers as well as seasoned buyers and investors. So we're just kind of going to run the course really quick and see where it goes from here. What do you think?
Yeah, man, let's do it, man. Thanks for having me on. I see you're staying home, helping
Yeah,
me
man.
yeah,
Yeah.
man.
I dressed up today. I did my hair. I've been wearing hats all the time, PJs. I see you're wearing a nice jean jacket, ready to go, rock and
Yeah.
roll.
This is dressed up for me when I'm at home.
That's good, man. Yeah,
Usually
that's
I'm in
good.
sweats and a t-shirt.
But before the virus, I always saw you in suits, right?
Yeah, suits or at least a blazer.
Yeah.
A blazer or a full-on suit.
Yeah.
I
I miss
prefer
the suits.
to be comfortable, man. If I could wear sweatpants and a t-shirt every day, I would. I'm comfortable. But if I need to be professional and go to a meeting, I definitely put a suit on.
That's good. That's good. I personally prefer the suit, but
Yeah.
That's how I get locked in.
You look like you were getting an actual office today.
I might one day. We'll see.
Yeah.
But so let's get into it. First, I want to start off by asking you so that people that are watching can know what type of lender you are. I know there's a variety of different lenders. There's direct bank lenders, there's non-bank lenders, and then there's mortgage brokers. So if you can kind of get into that.
Yeah. So I work with a non-bank lender. So you have the regular bank lenders, the Wells Fargo, Chases of the world, Bank of America of the world. So I work for a non-bank lender. We're kind of in between the big banks and then the broker channels. So the way we're different than the broker will go and Andrew, you'll go to the broker and then say, hey, this is my scenario. We have 700 FICO score. I'm putting down 3.5%. I'm a first-time home buyer. The broker will go and then pretty much shop your loan to all the lenders on the street, right, on the market. And then typically, not always, a broker might charge a point for their services. A lot of the time, the broker's point is called lender paid comp. So they don't always charge a point. But that's the difference between a broker where more so they're going to all the different banks to get a rate, say, hey, what's your rate for this scenario? And sometimes there's a hedge on that rate. So, for example, if a broker went to my bank, I'm with Commerce Home Mortgage. If a banker went to my bank and said, hey, can we use one of your programs? This is a scenario. My bank more than likely is going to put a little bit of hedge to that broker, then I would get better pricing in-house.
Oh, okay. So as opposed to someone going with the mortgage broker, they can go that route, but if they go with you, you'll probably provide a better rate if they go directly through you versus the mortgage broker.
So typically, not always. There's always exceptions to the scenarios, but typically we're going to provide a better rate, and it's going to be more direct access to the loan, and I'm charging you points. Like I said, brokers don't always charge points, but sometimes they do have to do bar paid comp, and they have to charge a point. Different than the bigger banks is that we can be a little bit less loose on the guidelines. So you might hear in the news, like for example, Chase is minimum FICO score is now 700. You have to put down 20%. Yeah. So a lot of banks are changing. So we are still able to provide FHA loans, conforming loans with 3.5% down, or conforming loans with 3% down, maybe even 5%, depending on the scenario. But we're still able to be looser with our guidelines, even though we also are tightening up our guidelines. We're not tightening up as much as the bigger banks. So non-bank lenders have always, since the financial crash, non-bank lenders have kind of grown rapidly. So we do the majority of the loans that are done by non-bank lenders.
So you guys technically kind of took over the market since the financial crisis, because a lot of these big banks, they got caught up in that subprime lending mix, and they had a whole bunch of restrictions from government, is what I understand. And that's how you guys kind of swooped in and got that business, right?
Yeah, definitely. It was even more loose until about a month ago when all of
Yeah.
this, the COVID-19, the coronavirus things hit our market, hit our country. It was loose to the point where we were able to do, unique outside of the box qualifying loans, bank statement loan. We look at the last 12 months of your bank statements instead of looking at your tax returns to qualify. We
Mm,
assets for income. Here at Commerce Home Mortgage, we had a program where literally you could put down 25% and we would leave your income portion blank on the application as long as you had a 25%
wow.
for a property.
Yeah.
Yeah. Community mortgage program. That was one of our main sources to lend to underserved bars and underserved communities. So
Hmm.
pretty much at the beginning of March, mid-March, um, non-QM, non-qualified mortgages were pretty much wiped off the board. So banks, it started to kind of trickle down. You heard one bank cut off their non-QM, and then it was only a matter of time before my bank cut our non-QM. And I think there's maybe one or two. There's only a few banks that are still doing non-QM, but they're
Yeah.
few and
Very
between.
few.
Very few because of their riskier loans, their portfolio. Usually keep those loans in house on the books. So that
Well,
being said,
sorry to cut you off, but before we go into like the conforming and non-conforming, and like you said, the non-QM, I know you kind of covered real quick that you're a non-bank, and then there's the big banks, right, like Chase, and then there's the mortgage brokers. But before we kind of go into the type of loans, what type of home buyer generally goes with a big bank, especially nowadays, right now with the coronavirus issue, and then go with you, and then go with the mortgage broker? Like, how does the buyer decide where to go? Because that can be very confusing.
so the big banks are ideal and perfect for, I guess, A paper buyers, A paper clients, meaning they have
Yeah.
760 plus FICO score, they have a 20% down payment, and they have reserves. A paper clients. So
Okay.
they're the big banks because typically, if an A paper client goes to a big bank or say even a mortgage broker or somebody like me, a non-bank lender, that big bank is going to provide the best interest rate for that type of client.
Okay.
And if you have additional assets, they may be able to get relationship pricing. For example, if you go to, I'm familiar with Bank of, if you go to Bank of America, right, you give them a certain amount of your deposits, you can get a discount on your interest rate. And Chase, these different banks, they all have similar programs. I'm not sure if they made any changes since the crisis or whatnot, but there definitely is benefits for A paper clients that are going to big banks. So where I'm at, like I said, it is in between because
Hmm.
I can service the A paper clients, no problem, right? But then I can also service the clients that maybe need a little bit of help. They don't have the best credit score, or they have a lower down payment. So the rate for A paper clients, the bigger banks are probably going to beat me. I don't know. They're probably going to beat me on the rate by maybe eighth or quarter. Not every single time, but pretty often they might beat me by an eighth or quarter if it's an A paper client. Whereas
Okay.
was coming first time home buyer, I'm looking to take advantage of maybe a down payment assistance program. I don't have the perfect FICO score. And then up until last month, maybe I need a self-employed bar that needs to be a little bit creative with the financing. That's where I would come in. I'm in the middle of both the broker and the big bank, right? The broker, it's kind of like, I'm trying to be the best client for a broker. A broker is for someone that is, pretty savvy, a savvy investor maybe, or a savvy buyer that's just looking to pretty much shop their loan and try to get the best deal possible.
Hmm.
I have a lot of good friends that are brokers, and they're doing a great job. They have a ton of clients that go with them. I think it's just to each its own.
Hmm.
But for the most part, the biggest difference between the big banks is that A paper clients are going to fit in that box. Majority of other clients are going to fit in with us. So non-bank lenders do the majority of low to moderate income mortgages.
Okay. No, that makes total sense too, because I've been fortunate to work with different types of home buyers, from first-time home buyers all the way to large investors, and it all depends on their scenario of what they're trying to do. It's kind of like what you were explaining. That fortunately, I know some people like you, right, that work as the non-bank direct lender, and then the big banks. and then I have people that are mortgage brokers. So depending on their scenario, I kind of put them in a spot and give them the options. They can go with these guys, but I probably would recommend this scenario because of your, how you are financially and where your FICO score is and things like that. So it really all comes down to where you want to be, right? As far as how you want to go about the process.
Yeah, and another big, I guess, difference. I've worked for big banks before. A big difference is turn times. Sometimes me being a non-bank lender or even a broker is going to have quicker turn times than the bigger banks.
I've seen that before. Yeah, go ahead.
So it's because one is they're a little bit looser on the guidelines, and two, it's just the staff and the amount of loans we have coming in is not going to be as many loans as a huge, humongous bank, Bank of America, Wells Fargo, Chase, for example, right? So sometimes we are able to close the loan quicker, and that's on purchases and refinances. Our refinances, we're closing loans a lot quicker than the big banks. Purchases, we can still do loans in less than 30 days, even through these crazy times. But that is another big difference as well.
Okay. And yeah, I mean, that's extremely important too, because when I'm in escrow with my client and I'm representing him on the buy side, and if things get delayed, that could be a big issue where we may be placed to get out of escrow and things can get really tricky. Or if everything works well, like you were saying, and you guys can be quicker, we can kind of remove contingencies faster and not kind of fall into that type of scenario for the seller where they get upset and then my buyer can possibly lose their earnest money deposit. So I'm glad you covered that. That was very good.
Yeah, definitely, man. Definitely. I have friends all over the spectrum, from the big bank, broker, everything. Everyone can provide their great benefit. And most importantly, if they're looking for a lender, it's really about who you're comfortable with throughout this process, because I'm literally going to get to know everything about your life. I'm going to know all of your financials, everything, your credit score. I'm going to see we see a lot of information, right? It's confidential, of course, but you need to feel comfortable with that person. You need to build trust with that person that they're going to be able to get the job done for you and provide this term and rate for you.
So that's actually really good to know, because when a home buyer is working with a lender, they have to give away but provide a lot of information that they wouldn't feel so comfortable sharing with their friends or family, right?
So literally everything. When I have family,
explain that. What do you normally require for, let's just say, a regular employee at some corporation, right? What would you need from that person?
So if you're like a salary employee, it's a little bit less information I need. So if you're a salary employee and you've been with the company for 2 years, we look at your last 2 years of W-2s, sometimes only 1 year of W-2s, right? And we look at your last 30 days of pay stubs to make sure you're still getting paid. You're still getting paid up to par at what you've been making, or maybe you're getting paid, right? And that's pretty much it. Sometimes we do need to look at your tax returns. If you're a salary employee and maybe you own another property and have rental income coming in, or maybe you have Schedule C income, maybe you have some self-employed income coming in, we have to dig deeper and go into your tax returns and make sure you're not showing a loss that will affect your salary income, or maybe you're showing more income that we can use from your Schedule C income. But typically, we're going to need W-2s. We're going to need your last 30 days of pay stubs. And then we're going to need, if you own any other properties, we need a mortgage statement and homeowners insurance statement for all of the properties that you own. We're going to need a picture of your ID. It's pretty much
a lot. Yeah.
It goes pretty deep. I try to prep bars that the process is going to be fulfilling at the end. You're going to be happy that you did it at the end, but it's almost going to feel like, especially when you're doing a purchase, it's almost going to feel like you have a part-time job for 30 days, right? I don't say that to scare bars. I just said to prepare them that there are going to be things that I'm going to need from you. And the quicker we get those things, the easier this process is going to be, and the quicker we're going to close your loan.
And I mean, I'm sorry. I was just going to say, it makes sense, though, that you need all this information, because someone is willing to provide that loan to someone. And usually most buyers, that's the largest purchase they'll ever make in their life. So it completely makes sense that it takes a lot of the time and they have to provide so much information and really get acquainted with someone like you when you're helping service the loan for them, because you're going to be with them the entire process, just like I'm with them as well through the escrow period. And once it closes, then we can kind of part ways and things like that. And that's usually a 30 to 45-day process.
Yeah. Yeah. It's definitely sometimes it could be a tedious process. I try to make it as easy for the clients as possible. Um, the more complete we get, the more complete file we get up front, meaning the more documentation we can get from you up front, the less we're going to have to keep asking you for certain items. So I try to get all the financial information up front to present a clean package to the underwriters. They look at it one time and say it's approved, or so they don't push the loan back, or they give us a whole bunch of conditions that then we have to go and hunt for. Because it's not every day that you're going and you're looking for your W-2s. Some people switch jobs and they got to call their old job to figure out how to get the W-2 from their online HR department. And maybe that job doesn't even handle the payroll, so then they got to contact the payroll company that work. It can be kind of complicated. It could be a lot. So I just try to get people mindset, I guess, on the right track at the beginning. The more complete of a package we can get at the beginning, the better.
Got it. And that's why I like working with you, because not only do you know your stuff, you're very professional, but you're pretty easygoing, and you make people feel comfortable. So that's why I've always liked working with you. And you have a style too. I can see your hat, ATM. Tell everyone what that stands for. And this is a new hat, right?
Yeah. So ATM is my initials, Angelo Magee. It's kind of just, it's convenient that I'm in finance, right? So I like to think like the mortgage ATM. I try to make, getting a mortgage as easy as pulling out money from the ATM, although it can never be as easy as just putting your code in and getting the money out. But it's just, people see ATM and think about money. It kind of works for my name and my personal branding. I do not work, ATM Home Loans is not a bank. It's just my own branding.
It's your brand.
It's my brand, right? I wear the hat all the time. I wear it when I golf. I wear it when I do videos. And even when I go out, it's funny, man. People call me ATM, what's up, man? So I try to do it on Instagram, all my social media, everything. It's I kind of started doing it about 2 years ago. I kind of just stuck with it.
Good, man. Yeah, I mean, we definitely, when this is over, I got to rock my AV hat. You rock your ATM hat. We got to hit the golf course, man. I miss it. I miss going out, man. And I think like everybody. Yeah,
I know, man. I miss it a lot, man. It's been I've been playing this little golf game on my phone. That's all I can do, and watching old Masters videos from ESPN Plus.
Hey, I mean, you're doing something. At least you're doing it, man.
I got gloves right here, man.
Oh yeah.
Yeah, man.
Nice. How often do you go?
Man, I'll go. It was a time last year where I was going a couple times a week, man. But this year it was really only once every 2 weeks, maybe.
Wow, that's a lot.
Cool thing though, before this whole thing happened back in February, we went out to me and my girlfriend went out to Arizona and went to the Waste Management Open, which is like the craziest party golf tournament on the PGA Tour. So that was cool. It's just crazy to see like how quickly everything can change. People wouldn't even imagine going to a full range party golf tournament right now, being around people, it just switched just like that.
And what's scary is it might be a while before we can do stuff like that, unfortunately.
Yeah, man. I don't see it. I don't see people being motivated to go to stadiums anytime soon.
No, that's going to be tricky from here on out, but we're still working, which is good.
Yeah, exactly, man. I feel that's one of the things, man. I'm very, very grateful that I'm still working, that I have, reserves saved up, that I'm able to, transition to working from home so easily. I don't take it for granted, the industry that I'm in right now. Who knows? Things could even shakier.
Yeah.
Who knows, right? But for the time being, I'm grateful for the job that I do have. And yeah, man, definitely.
Yeah, I definitely seen my client pool was, I had a lot of traction at the beginning of the year, and because of this, it just got really restricted, and I only have a couple now that I'm working with. And like you were saying, if things do get progressively worse, which I hope they don't, then things can get a lot trickier. And if that's the case, I'm sure you and I will do more of these videos often, I would imagine.
Yeah, sure.
We might as well inform the public, right?
Yeah, for sure, man.
So let's get into the difference between conforming, non-conforming, and then you were talking about the non-QM. But let me actually share my screen real quick with you. You should be seeing this in a moment. I'm going to pull up what you sent me earlier, which is right here. Feel free to kind of go over this. All right, cool.
Yeah, so this is just a quick, I guess, infographic I put up about conforming loan limits. So pretty much every year they kind of increase. In 2020, at the conforming loan limit in high cost areas, Los Angeles is a high cost area. Lots of Southern California, lots of California is a high cost area. We can go all the way up to $726,525 and be considered a conforming loan. So what that means is you can put down a low down payment, as low as 3%, FHA is 3.5%, all the way up to $726,000 loan amount, right? So right now, so the number you see, the $510,000, that's going to be San Bernardino, Riverside County, areas that are not considered high cost areas are capped at that amount. But a lot of areas in California are going to be considered high cost areas. So it's crazy because when you get into, for example, FHA, if you look at the $1.3 million, almost $1.4 million loan amount, you can buy a fourplex with 3.5% down using FHA, which is pretty crazy, right? So
that is crazy, man. Yes, that is very crazy. I know a lot of people build their wealth if they buy at the right time, and they take advantage of only putting that minimum amount. They rent out the three units and live in one. And that's only, like you were saying, 3.5% down, which is insane. It's a lot of opportunity to leverage yourself.
It's because people think like, oh, I won't qualify for a $1.4 million purchase. But when you're buying a $1.4 million fourplex, you have your income plus the income from the 3 rental properties that you're going to rent out that will help you qualify for that. So it can really up your buying power.
Got it. Okay. And then obviously they got to be very cautious on how they do that, because if you leverage yourself that much, that's risk. But luckily that's something that you evaluate with the buyer, right?
Yeah, I definitely go over that with the buyer. And one thing right now people are very cautious of is my tenant going to pay rent?
Yeah.
So that's one thing that's definitely on people's minds when it comes to buying investment properties. For example, I was literally in escrow on a condo in Arizona at the beginning of this whole shutdown, right? I went to school at Arizona State. I was in escrow to buy a condo, 2-bed, 2-bath, right outside of Tempe, and it was going to be an investment property. I was going to rent it out, and what happened is I couldn't get information from the listing agent about the tenant. I couldn't get the information. I was trying to get what kind of job are they in? Are they are they still working? Do they still have a job? Have they been laid off? I wasn't able to get any information. So me personally, I wasn't comfortable with going ahead with the transaction, so I canceled the escrow. But I know just from being on that side, I'm sure other people that are investing are thinking of those things. And if they're not, they really do need to consider getting information about the tenants if they're buying investment properties, because you need to know if they're going to be able to pay this rent. Because if they don't pay the rent, you're still going to have to pay that mortgage. Even though now there's things in place that you can put the loan on forbearance and whatnot, you don't want to get into a new loan and go directly into forbearance. And there's also things coming out pretty much that the people that we're selling these loans to, they don't want to see someone go directly into forbearance. So there are things come out where they won't even buy those loans if they go directly into forbearance. So
wow,
you always want to assess the risk, but now there's additional risks that are out there.
And we don't know how long this is going to go, so that's even more risky too, right? If we knew that it was going to be a 2-month, 3-month thing, that's still risky, definitely. But if it prolongs further, then I don't know. I mean, it's scary, because a lot of people are predicting it's going to be. When I say a lot of people, I mean like Goldman Sachs, big banks. I see that they're thinking it's going to be a V-shaped recovery, so drastically go down and then instantly go up. But now with new updates, and now that we're at 22 million initial jobless claims, they're thinking we're probably going to be more of a U-shape, and it can take a while. I saw the CEO of Morgan Stanley saying that he doesn't think we're going to get out of this until 2021. So again, like you were kind of saying, just to follow up on that, is there's a lot of risk involved right now.
Yeah, it definitely is, man. I like you always know your numbers, man. Ever since I met you, you always knew
Yeah,
everything about the economy, man, more than most people that I know. Um, so
appreciate that. I study
yeah,
a
man.
lot, man. I probably in the morning, I probably read every day. I probably read for like at least 3 to 4 hours a day, probably.
Really?
Just reading the newspapers, going through balance sheets, all that crazy stuff every day. Just because I want to be the most informed, like you were saying, I want to get that reputation, know what I'm doing for the most part. And then when there's something I don't know, which obviously there's still a lot, that's where I go to an expert like you.
Yeah, no one can say you don't know what's going on in the world and the economy right now. That's for sure, man.
Thank you, man. Yeah.
you always post lots of informational pieces too on your social, man. I
Yeah.
learn
Thank you.
at your social all the time.
Thank you, man. Thank you. Real quick on these conforming loan limits on this chart, what about the non-conforming? Can you kind of cover that as well?
Yeah, so non-conforming would be anything over these limits. Um, if you're in LA, non-conforming would be over 726,000 on a single family residence.
Okay.
So the thing is, so right now, jumbo loans, like I said, non-QM, non-qualifying mortgages are pretty much completely wiped out. Jumbo loans are getting becoming more strict than conforming loans. So people are having tougher times qualifying for jumbo loans right now than the
Mm-hmm.
people that are doing conforming loans. So there's different banks, my bank specifically, you can go down to 10% down on a jumbo loan. Now, 10% is no longer, you're going to need 20%. You're going to need a high FICO score. Um, Literally, some people are getting out of jumbo loans altogether. So, for example, Wells Fargo, Wells Fargo is not buying broker jumbo loans anymore. We can't source a jumbo loan to Wells Fargo. A broker can't source a jumbo loan to Wells Fargo anymore. Chase, again, is increasingly making their guidelines more strict. And it's going to be just across the board, jumbo loans are going to be harder to fund. Conforming loans, they're still going through. They're still being
Mm-hmm.
Fannie, Freddie, they're still buying these loans. Um, my main concern is what's going to happen to the servicers, because as people say, I want to put my loan in forbearance, right? I know this is kind of off the general question that you asked about jumbo loans. I'll get back
No,
to
that's
jumbo.
fine. Yeah.
But the more people ask for forbearance, the mortgage servicers that have to pay. So what happens is, say, if I fund a loan, right?
Well, actually, before you get into it, or maybe you were about to cover it. I'm sorry I cut you
Yeah.
off, but if you can explain what a servicer is to people as well.
Yeah, no, definitely. So, if I fund a loan, right, there's a servicer we're gonna sell the loan off. More than likely, we're gonna sell
Okay.
it Freddie. There's gonna be a servicer in there. Let's say Mr. Cooper's a servicer, right? So they get paid to collect impounds. So your taxes, your insurance. They get paid to collect the principal and interest payments. So what happens is, when they do that, then they go and they pay. They have to send that money to Wall Street, right? So right now, they're not getting money from people that are putting their loans on forbearance. So it's creating a lot of stress on non-bank lenders and non-bank servicers to pretty much stay afloat, because they're using their
Mm-hmm.
own liquidity to now pay Wall Street for mortgage-backed securities. So what's happening is they're asking for the Fed to help and provide some type of stimulus to get them through this time, but that is going to be a lot of stress. And quite honestly, if they don't get some type of help and people continue to put their loans up for forbearance, you could see a
Mm-hmm.
lot of servicers and smaller non-bank mortgage companies go out of business. Hopefully
Yeah.
not.
Uh-huh.
Go ahead.
I was just gonna say I saw on Bloomberg there's 2 million homeowners now in forbearance, right? That was last week. This week there's now 3, and if this continues, it's gonna be more. So I think what you're saying is the people that aren't paying their loans, right? The servicers are kind of stuck with it because they're not able to collect the payment, right? but the investors on Wall Street, the mortgage-backed securities, they still need to pay them, right?
Exactly. That's what's going on right now. And it's putting a lot of stress onto companies. And that's why guidelines are getting tighter, because so there's pretty much a study that says the majority of people that are applying for forbearance had low FICO scores and higher DTI ratios. So that's why they're lowering DTI ratios. They're trying to increase FICO scores. For example, FHA, you used to be able to do a manual underwrite under 580 FICO score. Now you have to have at least a 580 FICO score, at least with my company. I think that's general industry wide, but you got to have a 580 FICO score. So the majority of people that are applying for these forbearances are people that had higher debt to income ratios when they buy and had lower FICO scores. So that's why they're tightening the guidelines right now.
So that technically makes sense, right? The people with the lower FICO scores, higher DTI, right? They are the ones that kind of fell in the category, unfortunately, where they can no longer make payments on their mortgages. And I imagine a lot of it's tied into the unemployment. A lot of people initially, what they were showing in the first 3 weeks, most people that lost their jobs were in the service industries. The problem now in the fourth week that we're in, it's now white collar jobs that are getting hit. So I love that how you explain that. Can you actually explain to people what DTI means though, and not only the acronym, but kind of go into it as well? Because most people know what FICO is, but DTI is important too when you're getting a loan.
Yeah, for sure. So DTI is your debt to income ratio, and is one of the most important things when it comes to getting your loan, right? So the way we calculate the debt to income ratio is we look at your monthly income, and then we look at your credit report for all your liabilities, your car payments, student loan payments, credit card payments, whatever you have on your credit report as a liability. We don't look at like your light bill, your gas bill, your cable bill. We look at items that are on your credit report. So we add up numbers up, and then we put in what's called a proposed monthly mortgage payment. So all your credit liabilities, your monthly payments, we add them all up. Say you have $1,000 in monthly payments, right? Then we put in a new mortgage payment. We add those together, and that number cannot be more than 43%. Rule of thumb, general guideline, 43% of your income. So if you're making 10 grand a month, your credit liabilities combined with your housing payment cannot be more than $4,300 a month to qualify. So FHA used to be able to go all the way up to 55%, right? So on the back end, 45% on the front. Front would be housing related payments. Back end would be credit cards, student loans, all that stuff. Now they're moving it back, so there's only 50% on the back, 45% on the front. And these are the first changes. I wouldn't be surprised if more changes keep coming out. But for everyone out there watching, debt to income ratio is important to knowing how much you qualify for. If you understand the debt to income, how to qualify your debt to income ratio, you can do a pre-approval yourself. Just give yourself it won't be a valid pre-approval, but you can give yourself a feeling you can afford,
get an idea.
Right? Yeah, you can get an idea. So that's debt to income ratio. In terms of guidelines, everything is going to continue to get a little bit more tight, in my opinion. But
I agree. I think as this continues, everything will probably get more tight, and people will have a harder time probably to get a loan, right?
So here's the if people have if they have the money for a down payment, if they have a decent credit score, I think you'll still be able to get a loan at the normal pace, right? The pain things you're going to have to deal with if you're buying a house and you can qualify is the appraisal. Or this is just one example, right? The appraisal. It's going to take longer to get an appraisal scheduled. People don't want people going into their houses right now. Sometimes you can do an exterior appraisal, but these appraisal companies, just not to give any bad talk about appraisal companies or anything, but it's probably going to take longer for that appraisal to come back. So a 30-day escrow might turn into a 45-day escrow. Different things like that. An inspection might take longer to do. People are just less accessible, less willing to go out of the house to do things. So if you can still qualify for a mortgage, no problem, at least as of today, right? You can still qualify for a mortgage, no problem. But you will have to, some people are going to have stricter guidelines. You can bet on debt to income ratios being decreased, which they already have been, and timelines in general could be a little bit longer. The underwriting process itself, like we're still underwriting purchases just as quickly as we were before. It's just the overall home buying process could take a little bit longer because there's a lot of stay-at-home rules. You can't even show a house to a buyer. You know more about these than me probably, unless it's vacant. So there's a lot of different
No,
things
you
that
got
go
it.
into.
Yeah, the city of Los Angeles now allows people to go in as long as they follow safety measures and sign the PED form, which is the entry provision form essentially. But there's other cities that, oh, sorry. So let me backtrack. City of LA allows it only with vacant homes, but other cities are allowing, even if it's vacant or not, you could still technically go in as long as you take the proper guidelines. So that's good that you mentioned about the appraisers and the home inspectors, how everything can kind of take longer now because people aren't as incentivized to kind of go out and put themselves at risk. I actually made some calls to, I think it was about 4 home inspectors I use and roof inspectors and also termite, and they were telling me that they're still available and there's no delays, which is good. But with the appraiser part, I'm not too sure. Yeah,
I'm sure appraisers are doing everything they can to keep everything on a timeline. But in general, I wouldn't be surprised if things like this pop up where there's delays because of things like inspection or appraisal or
right.
say, one example, right? A seller has liens on their house maybe, or judgments on their house, right? So maybe they owe the IRS money. And in order to sell their house, they're going to need to figure out how much they owe because they're not going to release title unless they can clear a title, if the title's clean, right? It's going to take a long time for you to get a hold of the IRS right now to get any kind of information about tax liens or anything like that. So that's one reason. There's multiple different reasons that could delay it, but for the most part, the loan part itself isn't going to be delayed. It's going to be on par.
That's a really good point that you brought that up. There's so much moving parts that move during a transaction, and that's why it's good that the realtor and the mortgage person like yourself all work together and make sure that our client have that expectation of what could essentially happen. And the same thing on the other side, we have to communicate that with them properly so we all kind of have a good understanding and can eventually close escrow. So that's really good that you covered that. Can you actually go back to the jumbo real quick on what the minimum amount was before coronavirus and what it's looking like now for the down payment?
So the minimum amount that we could do is 10% down on a jumbo. That was considered a non-QM loan. On a regular, on a qualifying loan, we were going to be able to do 15% down. Okay. Pretty much maybe the first or second week of everyone being locked down, we received emails saying that, there's no longer 10, 15% options. You need to put down 20%. So, I mean, if you look at $1 million house, that's $200,000 you need to put down. A difference between $200,000 and let's say $150,000 is a big difference, right? Or even $200,000 to $100,000. So one way people are, let's say, being creative with financing right now, instead of using a jumbo loan, say you're buying $1 million house, they're getting a conforming loan for $726,000 and then getting a HELOC as a second lien on the back. So then you can go all the way up to about 90% LTV. You put 10% down. So you keep a conforming loan, but you just have to back.
That's interesting. So that's how we got to get creative, or not me, but lenders like yourself get creative and do things essentially out of the norm, because we're in these unprecedented times where you guys get creative so that you can essentially meet the demand for your clients. So that's good to know. Exactly,
man. So I've been, ever since I started out in Beverly Hills doing mortgages, I still live in Beverly Hills. I work out of Beverly Hills, right? So a lot of my loans were jumbo loans throughout my 4.5 years now of doing mortgages. They've been jumbo loans. So people I'm having to adjust right now. I'm pivoting. I kind of started last year, right, to focus on millennial home buyers, first-time home buyers, down payment assistance programs. But now I'm really going all in on conforming loans, because jumbo loans are getting more strict and more strict. So it's kind of interesting for me. As you know, in LA, the houses, you sell multi-million-dollar houses. So a lot of places, I mean, a lot of the the bars, a lot of the houses out here are considered jumbo loans.
The majority, for sure. The majority
Yeah.
all hit that jumbo loan line, and that's why it's good that we adapt. And like you were saying, you adapted last year and started working with not more, but buyers that are in the conforming bracket. And in these difficult times, we need to juggle all of them, but sometimes we might have more in one basket than the other. And it looks like right now we'll probably be working more with some conforming buyers in a way. So
Yeah.
that's good that you mentioned that.
Like I said,
I'm going to stop
still,
sharing the screen really quick.
Yeah, go ahead.
Sorry, go ahead.
You can still definitely get a jumbo loan. Just expect that, you know, the days of self-employed bars that make a ton of money but aren't showing it on their tax returns because, you know, they're writing everything off, right?
Yeah.
Business expenses. That those loans for that type of bar aren't necessarily there in the marketplace like they were before.
Okay.
I've worked with a ton of different types of clients out here, all over California, really all over the country, that have unique, crazy entrepreneurial careers, and maybe they weren't able to show 2 full years of a great net income on their tax returns because they're writing everything off. I've had people who had, you know, $1 million gross, and then, you know, they don't have that much net to use a bank statement program to qualify. So that is pretty much gone. I think there's 1 or 2 banks maybe that are doing it, and we'll see how long they continue to. Hopefully this is all temporary.
Yeah, exactly.
Yeah, hopefully it'll get back to business as usual. We can start doing all kind of unique loans and provide a service for every type of bar. Because really, I mean, that self-employed bar that maybe is making a ton of money, I would love to do a loan for that person as well, even if they can't show the net in the tax returns, but they obviously have the cash flow coming in to pay for this mortgage. I'd love to do loans for those people as well. So let's keep our fingers crossed that everything will get somewhat back to normal sooner rather than later.
I hope so. But regardless, for the people watching, if you work with someone like Angelo and I, we get creative, we work together, and we make sure to invest the time in you and kind of talk through things and go through different scenarios so we can eventually meet your expectation even through these crazy times. Now, Angelo, we're going to wrap it up now, but I do want to mention to everyone watching, I'm going to be doing another updated version of what I foresee in the housing market. I tend to not agree with so many people out there right now in the real estate industry, what they're kind of predicting. I'll get into that later in the next video. But Angelo, can you please share or tell everyone your social media tags? And then once you do that, I have one more question for you.
Okay. So yeah, I'm on Instagram. It's at Angelo Magee, ANGELO MAGEE. I'm on Facebook. I don't post a lot on Facebook, but it's Angelo Magee on there as well. One big thing that I'm on right now, I know, is a TikTok. So my TikTok is Angelo Magee with the ATM at the end. So Angelo Magee ATM. I post all kind of informational videos on there. I found some early success. My girl's she's really big on social, so she's been trying to motivate me to get more engaged in social. Yeah, that's pretty much it for social media. Instagram, you're pretty much just send me a DM and we can definitely chat.
Cool.
But yeah.
I was going to ask you, what's up with the videos that you were doing with other agents when we would go on Broker Caravan, which really sucks is literally, like, I think you told me 2 weeks before coronavirus happened, I was going to be featured on your show that you had, and then this hit, and now we can't go on Broker Caravan for now. So if you can tell people about that, what are you doing with that video?
They're trying to steal my shine, man. They're trying to shut down my show before it's going. Yeah. So yeah, it was this idea. I was driving back from Irvine one day in traffic, and I was thinking about different ways I can create content. And I always watch comedians in cars getting coffee with Jerry Seinfeld.
Oh yeah.
That's where I got the original format from, right? So
okay.
I said it would be cool to sit in the car with a real estate agent, and on Tuesdays we do brokers opens. It could be different days in whatever area you're in, but and Tuesday we do brokers open. It'd be cool to go to all the brokers opens, kind of tour some houses, but also have the opportunity to interview the agents for agents that are interested in learning maybe new tips and tricks to grow their business, or just looking for some type of information. with, you know, being able to see some luxury houses. It's not always going to be luxury houses once we get back to it. Eventually, I'm going to expand and go to all different areas of LA, Orange County, wherever it may be. But it was just an idea I had, and I just went with it. I have 2 episodes out now on my YouTube, just under my YouTube, Angelo Magee. And you were going to be the next one up.
Yeah, I
You're
was excited, man. I was
man.
getting ready, man.
Yeah.
I've seen
It's
I've seen
cool.
those videos. They're good. They're good with those agents that you've done
Yeah.
videos with. You've done a good job, and I like that. I like that inspiration from the what was it called? The comedians in the car with coffee, or what was it?
Yeah.
I've
So
seen
it's
the episode.
so it's on Netflix. Comedians in cars getting coffee. So he
That's
has
it.
like a car every day. And he gets comedians and they talk and they go get coffee. So that's where the inspiration came from.
Sweet.
So yeah, man, you definitely. I'm looking forward to getting you on there, man. I recorded. I have an idea to try to do some type of quarantine lockdown version of it. I'm working on it now. I have the interview. I just got to put some clips together. But
Okay.
hopefully, it's fun to do, man. It's fun to do, and it builds a relationship with the person you're interviewing even deeper. So
Good,
definitely,
man. Good. Well, I'm excited
yeah,
for when we're out of this mess, and then I will be featured on there. I look forward to it.
yeah, man,
And
yeah.
I appreciate your time, man. So yeah, thank you so much. And let everyone know your tags one more time for Instagram, at least, because I know that's where you put, aside from YouTube, you put your videos on Instagram as well.
Yeah, so Instagram, it's just my name, Angelo Magee, Angelo Magg. Sad part about Instagram, man, my dog has more followers than I do, man. It's a crazy world we live in. It's a crazy world we live in, man. My girl does all kind of dog posts and videos and everything. It's a crazy
Your
world.
dog has more. That's funny.
Yeah, yeah. But that's where I'm at on Instagram, though. Feel free to give me a follow, shoot me any questions. And Andrew, man, you're the man, man. I've known you for a couple of years. I remember the first day I met you, man. It's crazy. I mean, I just, you asked me how old I was, and I think at the time I was like 26, 27. You're like, oh, you're young. I thought everyone else was older.
Yeah,
Yeah,
exactly. I think I was 20. I think I was 22 or 23 when I started. Yeah. But you're
yeah,
young.
man.
We're still young, man, especially for LA standards. I mean, let's be
Yeah,
honest.
I'm 30 years old now, but the average age of a loan officer is 50 plus, man.
Wow. Damn, I
In
didn't know
terms
that.
of, yeah, in terms of the different rooms that I walk in work wise, I'm typically one of the younger people in there.
Wow. Well, Angelo, thank you very much. I will talk to you soon, okay?
Yeah, man. Have a good one, man. Stay safe
Thank
out
you.
there.
See you.